Right, guys, today I'm going to be discussing oil. Okay, I'm going to be discussing the trade that we're in, what it could potentially do. There's many things it could do. Someone asked me in a different group, is it in an area to buy now? No, no, and yes. We have to apply context, right? And I'm going to cover that in this. Excuse me, I'm going to cover that in this video. Context in trading is extremely important because if you're on the 30-minute time frame, this would be a fantastic buy, right? If you're on the daily time frame, this is a terrible buy. It has a very low probability, right, of giving you that long sustained buy over the next couple of days, couple of weeks, and so on, right, for a swing trade. But if you're an intraday trader, and look, I'll just show you. If you're an intraday trader and you get this rejection here at this area, boom, could you take it for a buy? Yes, you could take it for a buy. So it is a buy on the 30-minute time frame, but it's not a buy on the daily. Can it go from here and push up to here and therefore essentially be a buy? Of course it can. Why? Because anything can happen in trading, right? The sooner you stop trying to predict the market as a definitive, saying, oh, this is going up, lads, this is going up, jump in now, right? The sooner you stop trying to predict it as a definitive, like this is definitely going to happen, the easier trading will become. You have to be open, right? Because anything can happen in trading. So let's discuss it. Right, let me go I'll go to the 4 hour on this because then it'll be easier for me to show my entries. Okay, so my first entry was actually, I'll just draw this. My first entry was here, right? This was my first entry right here. In fact, you know what? I'm going to get rid of that. And I'll use this. That was my first entry right here. When you got this large engulfing candle, blah, 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 that's my first entry. Okay, my stop loss was up here at this yellow. Then what happened was it obviously pulled back for a deeper retest. That's absolutely fine. That was included in my plan. I already said if it pulls back and gives a deeper retest, we're not closing the trade. All I did at that point was I entered again. And my second entry was literally like... sorry. Wrong. My second entry was around this area here. All right. That was my second entry. So I had two positions running. And of course, when this comes to here, both are in drawdown for a mild period. That's fine. This one must have been up here, actually, because I did get into good profit on that. So it must have been around, let's just say around here, right? So as this broke down, two of them became in profit. This one here was in 2,200 odd profit. I closed that, right? Now, you may ask, why close one and not close the other? The reason why I do this is because this one here that I opened, this has the highest probability. If it turns back against you very slightly, you're going to instantly be in drawdown, right? Whereas the one at the better price, it has a good scope for bouncing around and you're still in profit and it's not going to instantly bang you into drawdown, okay? So whenever I've entered two trades and one's at a terrible price and there's an area where it can potentially react, I always close the one which is in profit at the shittier price, right? Sometimes even if it's in drawdown, but it's in a small drawdown, if I see that it's in a potential area where it could react, I will close it, just simply out of good risk management, right? The one which is in the best price, I keep them running, and I still have it running for now. Now, let me just jump to the daily and make it a little bit cleaner, I think. Okay. Let me just open this up so you can see it clearer. Okay, so this was around my first entry. This is my second entry. As this broke down and put me in profit, I closed the first one, right? So let me get rid of that. It was in profit to $2,263, I think it was, right? So a lovely trade, $2,000, fucking sitting in your arse in your living room is lovely, right? Then my second trade was here. It went all the way down to $6,000, okay? Now, this is not an imbalance, right? It's not an imbalance. I've already moved my stop loss down from a way up here, a way down to here. Let me just check if I'm still in it. I'm still in the trade. I'm at 2638. Okay, I'm still in it. It went down to $6,000 in profit. Now you may think to yourself, oh, why didn't you close at 6 grand in profit now? You know, you're way down to 2.6. So you have to think this way, because I'm a longer term trader, right? Most traders would think that way. Most retail traders would now be thinking, fuck's sake, I should have closed at 6 grand. But they're just thinking small, right? They're thinking on the money. Before I even entered this trade, when I just spin this around, I already had the plan and the potential that it very well could come down, retest here. I'll just draw it and show you. It very well could come down, retest here, pull back up, reject this area, and then give us the melts, right? That's absolutely possible. And I'm pretty sure I said it on one of the videos that I gave, right? Because I do loads of them. So I'm pretty sure I've done it in one of the videos. Let me just get rid of this now, just to keep my screen a little bit tidy, because it's full of stuff, right? So this is a potential, guys. This absolutely could come up here. However, it could, the highest potential probability on this higher time frame is that it just goes here, gives you a wick to this area, and melts. If we look, I'll zoom in, sorry. If you look, fuck me, move this out of the way. If you look right here, what do you have? You have an imbalance, right? So what could happen is this could come up here, and I'll just close this off. Reject this imbalance area and absolutely melt. Bang, retest this, and then give us that melt, okay? Doesn't mean it's going to, because anything can happen, remember, but that's a potential of what could happen here, right? And I'll leave that on there to view the next move. I've now moved my stop loss, so even if it hits my stop loss, right, I'm now still going to be up like 2-3 or 2-2 or something. So it means overall in this trade, I'm still up 4 grand, right? Don't look back and think, fucking hell, you could have been up 8 grand, you know, blah, blah, 10 grand, whatever. If I closed, 8 grand, sorry, if I closed at 6, you could have been up 8. You're thinking very short term here, short minded, right? We're in this for the long game. Now, there's pros and cons to everything in trading, right? There's the pro of, if I closed it, I would have been up 8 grand. However, what you're also doing at that point is look at the distance here, and look at the distance that I really want to trade from here to here, from here to here, right? Even from here to here, that's the real distance. This is fuck all, right? This is nothing. On the Fibonacci, that's only like the 38, right? Let's do it, and I'll just show you. There we go. Look, that's dog shit, right? So can it go up and retest here? Yes, it can. That the highest probability is it may just reject here and then melt. Okay. Now, if it comes up here and hits my stop loss right around here, because it's quite close, if it hits my stop loss quite close here, and it comes up to here and rejects, I've already made the 2 grand. I'll just fucking jump back in and take the trade again. Boom, away we go, right? And if it doesn't, if it breaks away, I'll wait for the confirmation first. If it breaks away, if it breaks past this high, what I'm then waiting for is, I'll show you, I'm waiting for 2 things at this point. If it breaks away from here, right, if it starts to come down here, I am not entering the sell at that point because it's not deep enough. I'm either going to be entering as it breaks here, right, and rejects, then I'm going to be entering around this area with my stop loss above here, or, wait, I'll just close that off. If it breaks above here, rejects and breaks down and starts bouncing around in here again, I am not entering, right? If this just starts ranging here, I am not entering it, guys, until it breaks, retests, and then away you go. And then at this point, these are my entries. This is the entry, and this is the entry. Okay, let's leave. These are the only 2 entries. Everything else the market does out of that, I don't give a shit, okay? I'm not paying attention to it. I'm not getting drawn in by FOMO and blah, 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 okay? So if it stops me out here, I've still made profit. I'm still going to be up 5 grand overall between the 2 trades. Fucking happy days, you know? I'm sitting in my living room here doing fuck all. And, yeah, we're just going to wait and see what it does here if it plays out and goes away. Now, sorry, why has that come up? Let's see what else we could be doing here. What is that? Okay, sorry, it's just guys talking in the group. What else? I'd really like to see this come here, like this, reject here, and then melt, and then happy days. So TP1 is here because it's an area of resistance, right? It's an area of supply and demand. It's a good area of value. It's a decent area of value. It's at the 50, the 500 fib. That is a nice area of value. And this one down here is in the 786. That is my preferred area of value. Obviously, if it breaks down here into the hundreds, that's fantastic. However, something that you have to bear in mind with oil, which your good friend Brian, who works in the oil industry, made us aware of, which is a golden nugget, is that it costs $75 to produce 1 barrel of oil. So what does that mean in terms of trading? When the market price gets below $75, oil companies are instantly losing money. And you can see that here. Look, they entered $72 a barrel, and they instantly got that the fuck out of there, because oil companies start losing money once it gets below $75 a barrel. That is a golden nugget to understand about the oil industry, right? You can see here it played around, 60 odd for a while. And there's probably times that are much worse, like down here, around about the COVID era and so on, where it was much worse, right? And what happens then? That's when you start to see everyone in the oil industry losing their jobs. Everyone's getting paid off, they're closing down rigs and blah, blah, blah. Once the price of oil gets above $75, job opportunities start opening up. They start calling back all the old employees saying, hey, look, we've opened up fucking Alpha Omega platform again. Do you want to jump in? We've got another 12-month contract, and jobs start picking up and the price of oil starts picking up. Okay. Things that make the price of oil move is things like crude oil inventories, supply and demand. Is there a higher demand than what there is supply? Is there a higher supply than what there is demand? That's obviously affects the price, right? If there's too much supply and not enough demand, the price will come down. If there's too much demand and not enough supply, the price will go up. The other thing that makes the price of oil move is wars, right? Particularly wars in the Middle East, right? Because that's the oil hub of the world, if you like. So these are the things that make oil move, right? Other than that, not much really makes oil move. It's not kind of daily volatility like gold. However, this is the markets, and you have to remember that anything can happen, and you must apply context to what you're talking about. For example, the context, like I said earlier, is this a buy or is it a sell? Well, what fucking time frame are you looking on? If you're on a 30-minute time frame, and you're only going to trade it, within the constrictions of the constructs of today, then yes, it's a buy. If you're on the daily, then it's not in a value to buy from, because it's already at a very high price, and it's nothing to do with being overbought and oversold and all this other fucking bullshit. It's to do with value, right? If you're a bank, JP Morgan, hedge fund, whatever, right? And you've got a $4 billion account to trade, and you're thinking about putting $250 million into oil, you have to ask yourself, are you going to buy oil here when you've got a resistance here? You've got a supply and demand, supply area here and supply and demand area here, right? You could call them areas of resistance if you like, okay? So the answer is no. Why? Because your risk is far too high. Your risk far outweighs the reward if you enter a buy right here. If you enter a sell and take it down, your risk and reward, the reward is far greater to enter a sell here than it is to enter a buy. Does it mean that it's not going to push up? No, it doesn't. It could very well push up, because they may push it up to this area here to get a better area of value to sell it. Do you understand? But if we look at it in perspective of sales, right, and we do the fib in this direction, we can see here that up here this is the 61, the 618 fib. It's a perfectly fine area to sell from. It's a good area of value. This is key. You'll hear me keep repeating myself. Area of value. Is it value to buy, or is it value to sell? It's very important in the world of trading, all right? And many people miss that out. So it's in a fantastic area. The 50 is a good area of value. The 38 is a shit area of value. The 500 is an okay area of value. You can trade from there. I generally don't. The 618 is a very good area of value, and the 786, 70, 786, whatever, is a fantastic area of value. So I'll happily trade from these two areas, which I've done. The 50 and below, I don't bother. Doesn't mean that you cannot trade from the 50. If it rejects the 50, you absolutely can, okay? It's just that as part of my method, and what I've kind of realized over the years, is they're lower probability trades for me. And on a personal level, I would rather wait for the higher probability trades. I don't give a shit if it comes to the 50 and rejects and it absolutely melts and I've missed the trade. I don't care about that. I care about choosing and selecting only the highest probability trades, which for me is the the 6 day above fib and the 70 above fib. Okay, that's it. That's all it boils down to. And you may be different because everyone's personalities are completely different. Okay, so don't waste your time getting into arguments with fucking idiots on Instagram and social media telling you that you're wrong and it's because this. Because in trading, everyone's got a fucking opinion, right? I'm simply sharing my opinion. This is based on my how my psychology works, emotions work, and over time where I found the highest probability trades stem from, right? You may be extremely different, and that's absolutely fine. There's more than 100 ways to skin a cat, right? Especially in trading, guys. So don't ever get bogged down with other people's opinions. You trade how you like to trade, all right? Um, what else we got here for all? Yeah, so the two possibilities are it may just start melting now, right? And I don't get stopped out and it just runs happy days. The other possibility is I get stopped out and I'm in profit. It comes up here, rejects, breaks below, gives a little, maybe just a candle wick pullback retest, and I may enter again, and away we go. The other one is it may break above here. I get stopped out. I've still made money. I'll be up 5 grand overall. This comes up here, rejects. I'll then enter again, and away we go. All right, that's it. You don't have to overcomplicate it. You don't have to get carried away with, oh, fuck, I should have closed down here at 6 grand. No. Now, what we were talking about pros and cons before, right? Pros and cons. The pros of closing a trade when you're up 6 grand, because that would have been 8 grand overall between the two trades. That's fucking fantastic. However, you have to remember that when you're opening and closing trades, what you're doing is you are actually creating a habit of doing so. Whether you're consciously doing that or not, you are creating that habit of opening a trade and closing a trade in particular areas, right? If you enter a trade here and you close the fucking thing here, you're subconsciously building that habit of closing trades early when you get a bit of profit, right? As opposed to letting the trade run to hit your TP. The more that you keep closing trades before they hit your TP, what you're doing is you're probably gonna find yourself bouncing around this area of I'm making money, I'm losing money, I'm making money, I'm losing money, and you're like fucking hell, I'm bouncing around break even all the time. You may find days, weeks, or month you're like fuck me, I know how to trade, but I'm bouncing around break even. I can guarantee you, if you go back and you look at your trades, you actually write down on your trades what happened. Most of all, you write down like, did it hit my stop loss? No. Did it hit my take profit? Yes. Did I close the trade early? Yes. You're probably going to notice a pattern there, and you won't see that pattern until you start journaling your trades, right? And you'll be like, fuck me, every time I closed it, because I thought it was going to come back and hit my take profit, it never, thought it was going to come back and hit my stop loss. It never came back and hit my stop loss. It did and eventually melt and hit my take profit. I fucking closed it early. I guarantee you guys, 8 out of 10, 9 out of 10 trades will happen that way for you just because it gives you a pullback. You've shit your pants. You want to keep the money you've got out of good risk management, blah, 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 right? So if you want to get out of the break-even stage, you really need to just lower your risk. If you think, fuck, if that hits my stop loss, I'm losing a lot of money, that means your risk is too high, right? So start off by lowering your risk, which then lowers your emotional response, because you should be trading an amount where if it hits your stop loss, you don't give a shit. There's no emotion involved because it's such a small amount, you really don't care, right? Stop thinking about how much money you're going to make if you have a bigger lot size and if it hits here, because you're focusing on the outcome, which is not guaranteed, right? You need to be focusing on the risk. And then just allow even if your trades pull back, if you want to move your stop loss to break even or in profit like I've done on this occasion, you absolutely can. The reason why I've done it on this occasion, which is very important to emphasize, is because it very well could come down to, look, this area here of imbalance. Just because it's a 38 doesn't mean it doesn't reject from there. It absolutely does, and can at times. It's just not a good area to buy from, right? So it's rejected here, bang on that resistance. It could come up here and push. That's why I've put it into profit, because I already predicted that it may push up further and hit these zones here. All right. Now, on the flip side of that, if it hits these zones here, or if and when, I should say, it hits these zones here and I enter a sell and it comes down and gives me a pullback, in this occasion, with the context of that trade, I would not be moving my trade to, break even. Why? Because it may just come back up, stop me out, and then melt, which you would have seen has happened many times, throughout your trading career, right? So I'd be keeping my stop loss way above the previous highs to give it that space to breathe. Comes back up for the retest. You could even enter another position instead of close. Enter another position to give you that kind of double in, which I done here, and away you go. Happy fucking days. But do not enter a second position while the trade is going against you, okay? Never open a second position while the trade is going against you. If the trade then came up for that double tap, I'm already in one position here, it drops, goes back up for that double top, whatever you want to call it, retest. As the candles are going up, you would not be entering it as they're going against you. Once you get that, maybe you get a candle pin up, liquidity grab, the next candle comes down in your favor, in your direction, and it closes, then you could enter that trade and take it down. You could then re-enter it, right? Because it's then going back in your favor. But never enter it as it's pulling away from you, because you're just adding to your risk, right? Which is unnecessary. You don't need to be doing that. And that's pretty much it for oil, guys. I am still in the trade. Let's see what I'm at just now on that second entry. I'm at 2,736 bucks. Yeah, 2,740 and rising. So if I get stopped out, I'm still going to be up over $2,000. Happy days, and that's the plan, right? It's either going to go here, reject and melt down. I've still made money, blah, blah, blah. It's going to come up here. I'm just going to wait as it breaks. I'm not entering fucking buys because it's in a terrible area of value to buy from, okay? Again, you have to incorporate the context in that. I am a larger time frame trader. If you're a smaller time frame trader on the 30, the 1 hour, yes, it's very much worth your while to take that trade as a buy. You absolutely could, okay? But as a high time scale, high time frame, trader, it's not worth me buying it here. I'm only buying this when it reaches here, when it reaches here, or when it reaches here. That is the only times I'm buying it, okay? And I'm only selling it from here, or I'm selling it from here. That's it, guys. All right. So that's pretty much it on oil. Let's do a quick recap on any pairs. Most pairs are absolutely shit. I ain't touching any of this. I've marked up the areas, but I ain't touching it. You can see, look, what I've previously hit before. EUDCHF, look, hit before. I didn't enter that. Yeah, look, the markets are really, really shit right now, guys, for currencies. We're in this kind of rangy period. I just ain't touching that. On the smaller time scales, can you catch trades on the 30-minute, the 1 hour? Of course you can. You can always catch a trade somewhere. I'm not interested. I'm interested, in this retest, enter, away it goes. That's all I'm interested in. If it rejected here, I'd be interested in sell. If it came here, I'd be interested in buy. Outside of any of these areas, I am not like this. I'm already not interested, right? So you can get rid of that. You can get rid of that because it ain't doing anything. So that's it. That's it. Look, so I already marked this up. I had just moved this aside because every time I was trying to show you the candles, that was fucking flashing up and annoying me. It was driving me nuts. But look, I already showed this in one of my previous videos. I actually marked all of this up. I explained how it would potentially work out when these candles here had formed and it had not broken this. So you're able to see this, right? Exactly play out. I already said I wasn't going to take it. It's just a shitty trade. I'm more interested when it comes to here and rejects and then goes, right? I'm not interested to take it from here to here, guys, and that's it. I already mentioned that. If the reason why I marked this up is that some of the guys in our Discord group, they take these trades, the ones that I don't like to trade. I still give them because they are profitable trades, right? You'd be up a fucking lovely amount right now if you took that. So I just don't take every trade that's going. I select my trades very carefully. It's different for me, especially now because I am trading other people's money on what's called a PAM account. You may know it as a copy trader. It's the same thing, right? But if you're trading your own money, you can take these less probability, higher riskier trades. I just don't because I have to think about everybody's money, right? Not just my own money. I have to think about, is everyone willing to risk losing money to see if this trade works out or not, right? So I have a different mindset and approach to the markets than you simply just trading your own money, okay? Look at that. It's all just rangy, guys. It's dog shit. I wouldn't touch this, all right? I already gave this. If you wanted to trade it, you could. I wouldn't touch it. But you can see if you did take it in our group, if you marked up your charts and you took this, usually Big Mel will take something like this because it is a decent enough trade. You can see it would have been a good return trade, all right? you would have got returns from it. I just ain't interested right now in this. Um, I'm just someone who employs a lot of patience. I really want to wait for those fucking sniper shots, those sweet spot entries, okay? And that's it. That's just how I roll. Here, look, came again, boom, retest, away it goes, bang, bang. That's your second entry. If you want to trade that, that would be your second entry. Anything it does outside of this, I ain't interested. Um, Look, I'm not even going to. What's the point? All currency pairs are absolutely dog shit right now. My good friend Joe, he has his own trading signals thing that subscribers pay for, and people were complaining how you haven't given us a signal in 2 weeks, and he was like, "Fuck off! We're not here to trade, right? We're here to make money, guys." And when there is a trade, we will take it, especially if it's a high probability trade. Low risk, high probability, you let that fucker run, and from low risk, you can make really good money. It's about consistent gains, right? Don't try and get out of the mindset of thinking you need to be taking trades all the time to be taking money, because it's bullshit. You don't. It's usually the opposite. You usually fucking lose. The more trades you enter, you normally lose, right? You want to pick the highest quality. And many people in trading forget that we can physically choose what we want to trade and what we don't. People will mark up an area and say, "Oh, look, it rejected. I'm going to enter that." You don't have to take that trade just because it's there. You can reevaluate it and think, "Look, is it a good trade? Let's look at it in context. Is it a good trade? Nah, it's shit. Because if you're going to take a sell, it's only going to go from here to here. If you're in lower time frames, yeah, that's a big trade. But look, for me, I want to be fucking, look, order block, break away, retest, reject, away it goes. That's what I want to be trading, lads. I want to be fucking entering here, entering a second position here on the retest, and then letting that fucker melt all the way down here. So we have different angles in which we approach the market, right? Pardon me, that's what I aim for, and that's why with my method, we need to employ patience. Okay, let's have a quick swatch at the news. Let's see what we've got. Fundamentally, if you're not doing fundamentals in your trading and you're a day/swing trader, you have lost your mind. Don't be trading, and I'm saying this from my own. I used to be this guy, by the way. Don't be trading basing it on drawing a fucking line on your chart and saying, well, if that breaks my line, I'm going to enter that. You have to ask this. I used to be that guy, by the way. I used to fucking be that guy um, until I spent a lot of fucking money, over $5,000 on 2 fundamental courses. And honestly, I could not believe I had never traded having learnt fundamentals. I just thought, you fucking idiot. I promise you, if you learn fundamentals, you will think the same thing about yourself, 6 months later. I promise you. Look at it this way: if you're a bank, right, a banker, you're a fucking JP Morgan, Goldman Sachs, hedge fund fucking manager, whatever, right, and you have a $5 billion account, and you're going to place 200 million into a particular trade, stacking it in, right? Are you going to place that trade based on fucking GJ breaking that line that you've drawn across your screen, or are you going to base it on genuine global economic news based on each country? Like in the pound, credit card spending is high, CPI is high, manufacturing PMI is high. Even though we're not a manufacturing country, it's still above 50, it's still bullish. Services PMI is high, bullish. Fucking employment is high. Average earnings is higher than last year. Unemployment has dropped. Fucking hell, the pound is strong. And then you look at Japanese yen. Unemployment is high. Employment is low. Average cash earnings is shit. It's shit. It's higher than before, but it's still shit. It's a 1.9. That's fucking awful. The economy is just wank. Their inflation is fucking terrible. You need to pay the Bank of Japan to keep your money in Japan. They don't pay you a yearly interest for keeping your money there. You need to pay the Bank of Japan to hold your money there, right? The economy's fucked. So basing it on that, of course, the banker is then going to choose to put his money into pound over yen, right? So that means he's going to buy pound Japanese yen. He ain't going to sell it, because if he sells GJ, that means he's decided that the Japanese economy is a far less risk, potentially yielding a higher return than the pound. And when you take all these economic factors and data into consideration, and you put the pound statistics and data over here on the left and Japanese over here on the right, there's no way in this fucking planet you would say that the Japanese economy was less risk. It's a far higher risk, and the potential to give you a yield is far, far less. So where are you going to put your money? You're going to put your money into pound, right? Now, You come across the GJ and you look at it. If you're that banker and you've decided, right, I'm going to put my money into the pound against the yen, are you going to do that right now at this point in time? Are you fuck? Because it's way overvalued. It's not about overbought and that fucking bullshit. It's not at a price of value. It's way overvalued, right? And we're due for a correction. So the only places you're really looking for is here. Let me do it on the weekly, right? Let's have a look. So still going, but you just wouldn't buy it here, right? It's not a place of value, so it's really, hold on, you want to mark this up correctly? It's going to be, I would say here, actually. Here, here, and here. These are the three places that you care about buying GJ. Once they get here, you don't just buy. You obviously have to go back and check the fundamentals and make sure they've remained the same, right? Because if they've changed from like month to month, quarter and quarter, and it comes here, and it turns out that when it reaches here, pound has dramatically weakened and yen has showed some strength, then what you may find at that point in time is it pushes past here and it will come down and reject at this area. And when it gets to here, you may then look back at it and you may then see that pound has become stronger again and the Japanese yen has become weaker. So what does that imply? It's going to fucking retest and reject here and it's going to start flying. So that means this is where you would buy from. Okay, so you need the context, guys. You can't just say, when it hits this fucking line here, I'm going to buy. You need the context. You need the genuine data, fundamental fucking reasoning, all right, of why you're taking a trade. A bank ain't putting 200 million quid into this trade just because fucking he got a little wick here, okay? Technical analysis is very important because it allows you to see these key areas of where it's going to come in. If you use the fib here, let's have a look at the fib. Just say, let's say this was the top, but it's not yet. 618, happy to trade from here. Would I trade if it comes down and retests here, rejects, and away it goes? I still would not be entering because it is not at an area of value for me to enter. Okay. Down here, the 618. Yes, absolutely. More than happy to trade from there. And especially this is my golden zone, right? The 70786 rejects anywhere down here. That is my sweet spot. I would be lumping into that all day long as the fundamental is and the data aligned with that. All right. Let's have a quick look at the overview. Prime market. Let's look at GJ. Let's see what retail traders are doing and let's see what the banks are doing. DXM means Dumb Money Index, which is retailers. Retailers, which is you and I sitting at home fucking gambling, is they're all in sales, right? COT is commitment of traders. That's banks. Banks are all in buys. So why would you be in sales, right? It doesn't make any fucking sense. Why would you go against the banks? If you're sitting at home as a retail trader, right, and your stop loss is a $200,000 stop loss, you still do not have enough money in your account to make the market move, right? So if you look at your stop loss now, it's probably 500 quid, 50 quid. You ain't making a fucking inch of difference in the market. These guys are the ones that make the difference, and these guys are the ones that make the market move, right? Remember, 1 pip in the market moving is the equivalent to 100 million US dollars. So if you measure a candle and it's 17 pips, that's the equivalent to $1.7 billion. You don't have the money to do that. None of us do. All the retail traders in the world combined don't have the money to make the markets move. It's the banks that make it move. So if the banks are in buys and retailers are in sales, which one do you think you should be in alignment with? You should be in alignment with the banks, right? But you would not buy it yet. Maybe if you're on the 15-minute time scale, yes, you can enter a buy and you're going to catch a candle fucking from here to here, from here to here, you've caught yourself a little buy. That's absolutely fine if you're a low time scale trader. But for me, being a swing trader, I'm not touching the market until it gets to at least here. Even here, I don't give a shit. I'm not entering a trade if it comes here. Not. If it comes to here, yes. If it comes to here, yes. Especially if it comes to here, absolutely bang, and away we go. All right, guys. We've been quite long on here today. I'll cut it at that. But now you understand what we're waiting for in oil. You understand all the ins and outs. And let's see. Look, she may, when you look at it on the weekly, it may very well, wait, I'll remove this. It may very well break up here and go. It may do that, but we've got a beautiful area of imbalance here, and if you mark it up, it's in a beautiful area of value on the higher timescales. It's very important. Look, it's bang on the 786. Well, it's bang on the 618, sorry. So it may pull up here to the 786, okay? And if it does, that's fine. I've still made over $5 grand on this trade, and it's going to come up here, reject. I'll enter again, and we're just going to let it right down to here, right down to here. At which point, when it does that, those same trades at the same level of risk will be 20, 30, 40 grand trades, guys. So happy fucking days. Just wait for the right moment. All right, lads. If you want to come and join us over here at our Discord channel, look, when I'll open this up for you, we have a full Discord channel, guys, where we teach you everything. If you look down here, we've got all the lessons. Trade. We've got where are we? Sorry. We have got beginner videos, swing trade education, extra swing trades, risk management, trade reviews, blah blah blah. We give signals, so we actually tell you the exact trades that we're going to give, that we're taking, sorry. You can see there was my oil sell limit. General chat, where we bang in, especially Lee puts in the trades that he's taking here. Lee does scalp trading, and I do the swing trading, right? So you have the best of both worlds. You can come and do it all. If you want to day trade as well, Lee also does that. And if we come down here, you can see the trade results. Look, we've got some great results for the lads. 3 wins, 1 loss. Up again. That's my oil yesterday, up 6k. Let's have a look at anyone else. We've got Alex, $538, and so on. You get the point, right? Look, all of the students learn how to do it and also make money at the same time, and we're very happy to do that, guys. All right, so we always put our money where our mouth is. For our subscriptions, for daily mentorships, for live trading sessions, education videos, education books, there's free books in there. Risk, the whole shebang, signals, we tell you what to trade, the whole lot, we charge £97 a month. And to put our money where our mouth is, we give you an entire month completely free with full access. So you can physically come and check us out for an entire month, completely free. And you can see, are we talking shit or do we actually get results? So we're happy to put our money where our mouth is. All right. If you want to come and try that out, jump across to our website, www.thetradingguys.com, and click on the area for free trial and follow the instructions. It's very important that you type in the words free trial in the relevant box, because if you don't and you just hit forward and subscribe, it will automatically take £97 from you right away, and there's nothing that we can do to kind of reverse that and get you the free trial. Okay, so please make sure that you follow the online instructions. It's very important. I'm Ryan Mack. This is The Trading Guys. Have a great week. Let's go.